Hello and welcome to CATEX-TV. I'm Tom Bailey in London. It's 4:30 PM in London, 11:30 Eastern Time and 12:30 in Bermuda. Today in history. Today in 1586, Sir Walter Raleigh brought the first consignment of tobacco to England from Virginia. And today in 1694, the Bank of England received its first charter. And now for news. French President Nicolas Sarkozy's doctors are expected to advise him to slow down and cut back on his exercise regime after he collapsed whilst jogging and was kept in hospital overnight. The 54-year-old president, a keen runner and cyclist once nicknamed Speedy, was kept under cardiological observation in the Val de Grace military hospital overnight after he stumbled and felt faint during his Sunday morning run with a team of bodyguards at La Lanterne, his weekend residence in Versailles. A witness walking in the gardens of the Sun King's palaces leading to Lanterne said he saw the president running with his guards. He looked tired and suddenly fell over. Mr. Sarkozy's wife, Carla Bruni Sarkozy, aged 41, rushed to the scene on a scooter, according to the witness. 2 helicopters landed in the woods shortly afterwards, and Mr. Sarkozy was transported to the hospital in Paris. Advisors said he has suffered a minor vasovagal episode, a problem with the vagal nerve in the brain which slows the heart rate and blood pressure and can occur during exercise. Last night the Val de Grace hospital was guarded by police and Secret Service agents, and there were metal barriers around the entrance. President Sarkozy was discharged from the hospital earlier today. A firefighter has become the 6th to die battling an outbreak of wildfires in Spain. The 31-year-old, who suffered burns to more than half his body when he was caught out by a sudden change of wind direction, died in a Barcelona hospital, according to a medical spokesman. He died on Friday. The firefighter had been battling an inferno at Horta de San Juan in the south of Catalonia when he was caught in the blaze. Four of his colleagues were killed almost instantly at the scene, while one was treated in hospital with burns to 75% of his body. The Spanish Interior Ministry placed the country on maximum wildfire alert on Friday as 8 large fires continue to rage in the east of the country. Around 1,500 people were evacuated from the Mediterranean coastal resort town of Mojacar as flames spread, fanned by dried winds amid intense summer heat. By noon on Friday, the perimeter of the fire threatening the seaside town, popular with surfers, had been secured, and fire units were concentrating on extinguishing hotspots within, according to the Forestry Commission. The driver of a firefighter's lorry was killed on Thursday after his vehicle fell into a ravine as it attempted to avoid flames. More than 17,000 hectares has been swept by wildfires since the beginning of last week in Spain. The blaze at Horta de San Juan was brought under control earlier on Friday. Now, we're still monitoring activity on the Atlantic and Pacific coasts and in those oceans, but so far there's been no sign of any tropical storm or hurricane activity. As the hurricane season continues, we will continue to keep you posted, and as soon as we have any indications of a tropical depression or storm brewing, we'll let you know. President Obama's plans to cut terrorism backup could kill cover. Risk Management Solutions boss Peter Ulrich has warned that the Obama plan to reduce the federal subsidy to terrorism risk insurers could trigger volatility in the insurance market. President Barack Obama's 2010 budget calls for a cutback in the subsidy under the Terrorism Insurance Act. The law, enacted after the September 11, 2001 attacks, repays insurers if extremists strike again. Reducing the subsidy will encourage the private sector to better mitigate terrorism by developing alternative reinsurance options and building safer buildings, according to the government. However, without government subsidy, more than 80% of current providers will no longer offer terrorism risk insurance, according to Aaron Davis, Managing Director with Aon National Property Brokerage. Davis said the insurance industry is highly distressed. The call for scaling back the Act will have a very negative consequence. Federal government currently covers 85% of insurance loss after claims exceed $100 million. The company pays deductibles equal to 20% of its annual commercial premiums. The program is capped at $100 billion in total losses and Congress and the Treasury Department may grant reimbursements beyond that cap under current rules. In the UK, a new report commissioned by the British Chancellor Alistair Darling will this week call for the government to consider passing parts of the welfare state into the private sector. A greater share of unemployment and long-term sickness benefits could be paid by Britain's insurance companies rather than the taxpayer, the paper will claim. The report, authored by Andrew Moss, Chief Executive of insurance giant Aviva, suggests that tax breaks for the British insurance industry could help fund the plans. Moss's report has been endorsed by Darling, who co-chaired the committee that put together the recommendations. The report recommends that the industry and the government assess the scope for a greater industry role in helping people deal with risks such as unemployment, ill health, and the need for retirement income or long-term care in order to help reduce pressures on the public purse. Through a combination of state pension and welfare benefits, the government in effect provides about 65% of all insurance in Britain, according to the report. If a further 5% of those risks were transferred to the insurance sector, the government would save about £17 billion a year in welfare payments. Those same benefits could be provided by the insurance industry with just £9.7 billion of new capital, which could be raised by tax incentives encouraging new capital from international financial markets. The report points out that the UK tax regime for insurers has proven to be uncompetitive, with a number of large insurers choosing to switch their head offices to Bermuda or Ireland to benefit from lower rates. It claims that change in the tax regime would ensure Britain does not lose its status as the global centre of the insurance industry. Moss also highlights the fact that insurers employ about 300,000 people in the UK and have withstood the ravages of the credit crunch, proving that they are worthy of support. Elsewhere, the report calls for a new financial education commissioner to improve the public's understanding of financial affairs. And finally today, Aviva, whose Chief Executive Andrew Moss has compiled that report we just referred to. Aviva is believed to have a £500 million exposure to Modus Ventures, the commercial property empire, where several parts have collapsed into administration this year. The insurance giant with such a total commercial loan portfolio of about £10 billion lent Modus funds secured on several shopping centres. The administrator, KPMG, appointed by Aviva in May, has revealed that the insurer is owed £143 million secured on the Grand Arcade shopping centre in Wigan alone. KPMG said any sale of the arcade was unlikely to exceed money owed to Aviva, suggesting it could take a hit on the sale at current valuations. Modus, which is also behind the Hounshill Centre in Blackpool, is thought to have good levels of occupancy and rent from many of its businesses, but was hit by new developments where funding dried up. Lenders to Modus, whose four owner-directors include Burnley Football Club director Brennan Flood, included Nationwide Building Society, Anglo-Irish Bank and Lloyd subsidiary HBOS. Aviva said there were no plans to sell the Grand Arcade unless a good offer emerged. Commercial Finance Chief Kevin Sale said, "Our loan is secured against the centre and we are happy it is generating good income with strong rents and strong tenants." Well, that's all from us today. Until the same time tomorrow, thank you very much and goodbye.